one humanoid robot today would cost like $50,000 to $70,000. Think about robo-taxi. All the taxis around our city are running driverless. We want to be the investors. So when we're working, our cars are generating revenue and cash flow for us. Tokenization is here to actually help you do so, like opening a channel for you to invest into.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Welcome to the Presto Research Podcast. I'm your host, Peter Chung. I'm joined by my colleague, Thomas. And special guest joining us today is Kony, who is CEO and co-founder of GAIB. Hi, Kony.
Hello. Thanks for having me.
Well, thanks for joining us. We got a lot to talk about, so maybe we start off right away. First of all, can you tell us a little bit about your background, Kony, and how you ended up, setting up a GAIB and running the project?
Sure. Let me give you a quick intro. So, Kony here. Used to be in traditional finance, doing banking, investment banking, focusing on credit research, equity research, and also private equity investments. And then started my career in the asset management field, mainly focusing on SPAC, hedge fund, VCP investments. It was at that time that I got super interested into crypto. That's why I joined an exchange at the M&A team to help them with China expansion, like M&A on exchanges, wallet companies, esports, gaming, fan token platform. So anything they can bring in strategic values to the exchange would fall under my radar. So spent some time there until the exchange got sold. And afterwards, I went back to asset manager to help them start a crypto VC fund together with my partner. So our VC fund mainly focuses on investments into deep infrastructure projects in blockchain and crypto. So we look at like layer 1, 2, ZK, cross-chain, middleware, all the different infrastructure projects in the crypto space. So our portfolios include like EigenLayer, Babylon, RISC-0, Linera, Sui, Renzo, Polyhedra, etc. And yeah, so I was looking at the crypto AI space, and a big fan of that as well. So that's why when I found there's a gap in the market, I started GAIB with my co-founder. Just a little bit background about my co-founder and also the rest of the team. So my co-founder Alex, he is the second gen from a Taiwanese semiconductor company, and his father founded Realtek, which is one of the top 7 chip maker, making the different microchips like Bluetooth, sound controller, integrated circuits, etc. And he himself also runs a cloud company called GMI Cloud, which is the NVIDIA cloud partner based out of Taiwan and US, and one of the first APAC NCP in the space. So we have actual operators in the team that run AI cloud, understand the business, understand the GPU, the asset class, and also the demand side as well. And then the rest of the team, my CTO comes from Cornell, PhD in cryptographic research, DeFi OG, started doing smart contract development, and also independent white hat and co-auditor since 2016 to 17. So he's very DeFi native guy. And then the rest of the team, we have Binance Labs investors, we have Bitdeer, Expedia, M&A, and corporate strategy developer, and also all the other AI experts in the field as well. So we have a unique team, because of unique experiences in traditional finance, AI, and also blockchain.
Yeah, that's quite a background. So the year that you switched to crypto was then, what was it, 2017, 18, that cycle?
21.
21, okay, yeah.
Yeah. I'm the NFT cycle, the DeFi somewhere NFT cycle.
Yeah, you've done quite a lot, although that's relatively kind of recent. Thomas, did you have something to add? You wanted to ask something?
Yeah. So I thought it was really nice, how you got into crypto space, and I was thinking maybe you should start talking about the GAIB project. How would you define the problem that GAIB is working on, or so to say, a thesis that you started with?
Yeah. It's very interesting. The story how I started GAIB is because back in 2023 in September time, Q4 late December time. So I was looking at the crypto AI crossover. I was looking at what are the interesting opportunities in the space here, because I'm a big AI fan. At the same time, I'm also a big crypto investor, right? So I'm trying to see what are the opportunities between the two. because I built my own chatbot agent when ChatGPT 3 and 3.5 just launched. So I know the whole process of how do you train their model, how do you fine tune it, how do you factorize databases, how do you do RAG. And I was trying to see like, can crypto bring something here? So it was at that time I studied most of the crypto AI projects that were doing decentralized compute marketplaces like Aether, IONET, and a couple others, and also seeing all these like decentralized data labeling solutions, incentivized network, CKML, all such things. So, but it got me curious because there were literally nobody focusing on any perspective from the finance side. Because I'm a finance guy, a traditional finance guy by training. I was like, this is a huge asset class that crypto is here. For me, there are two things, the two ethos of crypto. One is to create the creation of new market. The other one is the creation of new asset class. So I'm thinking, why can't we actually allow people to invest into AI instead of just using crypto and blockchain as an incentivization network? So with that, I was looking at, what could be an interesting angle, interesting asset in the whole AI supply chain. And I finally got settled on the compute side. Because if you look at the whole AI supply chain, I would describe it as a smile curve in terms of the value capture. Meaning on the left-hand side, these are the infrastructure. On the right-hand side, these are applications. Usually most of the values are being captured by both ends. But at that time, the application side were not very well developed. You look at a year and a half ago, all the big AI companies were only there to do a foundational model racing. Like keep on training the better model. There were not much use cases. And no matter what, infrastructure still get benefited. It's the same as like Visa did the same as Visa did, right? So no matter who's going to issue the Visa card, Visa still get a fee for authentication and authorization there. So it caught my eyes, the AI infrastructure sector. So I was looking at what other things we can do. And I realized that there's actually no way for us to invest into the AI infrastructure asset. So that's why I'm thinking, can we do something here using blockchain and also finance, combine them together to allow people to invest into this asset class. And I shared the idea with my co-founder, Alex. And then because it's his background, he immediately gets it. And we joined forces last year to build this. So that's the whole background, how and why we see like GAIB is doing. So we're solving several problems. One problem, as I mentioned, we're solving the accessibility for people to invest in the AI asset. And then the other problem that we're solving is actually on the supply side, where the cloud companies are facing. Cloud business is actually a very capital intensive business. You need a lot of capital. Essentially, every GPU, every machine that you own as in a cloud company, they're like the gold shuffle. And also they're very, very expensive. So you need a lot of capital to actually grow. And in order to get capital, it's not easy because this is a new industry, new asset class. Traditional finance may not find it that familiar to them. They will say, what is GPU? How do they work? What is the unit economics? They are not comfortable with this asset class, as we always know after the financial crisis because of that. So that's why I'm thinking, we saw that there's a gap in where we can be the one doing like helping this cloud company to grow at the same time, open up a channel for people to invest into these assets. That's what gave birth to GAIB here.
Let's talk about how the tokenization works for GAIB because it seems quite interesting. So if I look at the GAIB, am I looking at am I owning a data center or some hardware piece? How does it work?
Yes. So tokenization has several levels. On the GAIB side, usually the way we work is you as a cloud company, right? So now you want to get capital to grow. What we need from you is, number one, we need to have your asset as like stake with us, as a collateral with us, so that we make sure that when we give you money, you won't go away. The second thing is we also have to make sure that you actually have the cash flow and revenue, such that the one who invested in your assets can actually be benefited for the growth, right? So that's why when we do it, what the tokenization happens is the cloud company come to us. We need to check all these different types of asset. What is the GPU they're having in terms of vintage, in terms of type of GPU, and how much they make. And afterwards, we tokenize these GPU, the asset plus the cash flow, into a fungible token on chain. And afterwards, you as an investor, as a user, you can buy these tokens, tokenized GPU tokens, such that you're entitled to whatever the GPUs are making in terms of revenue, in terms of cash flow, in order to get benefited. So that's it looks like a simple process, but in fact, when we do the tokenization process on the smart contract level, the blockchain level is easy, but then on the actual legal level, like the off-chain level, is complicated. Like for example, how are these like GPU being structured? How are they being collateralized, tokenized on the legal agreement side? So we have that to the highest standard, such that we want to protect whatever is buying into these assets on chain can actually enjoy the benefits the enjoy the benefits and the rights they should own.
Yeah, that's interesting. But one question I have is that is on standardization. So what I mean is that if you look at other areas of commodity trading, for instance, like a carbon credit market, one of the reasons why maybe perhaps that marketplace hasn't been able to scale so much is because it's been a rather challenging task to standardize or configuration of the contracts. We often still saw this in other commodities market, like if you look at futures contracts on many soft and hard commodities, oftentimes I think the standardization is an important part of making the market actively traded. And do you have the same kind of problem when you try to tokenize and trade the compute as a commodity?
Yeah, that's a very good question, actually. When we actually look at the GPU assets, right, they can be vary a lot. It can vary from company A to company B, from the GPU type, for example, whether it's H100 or H200. So they're not like too fungible in nature for GPUs. For example, like even the same type of GPU can be manufactured by different OEMs. It can be from Supermicro, from Dell, from HP. And fungibility is definitely a problem here. But what we do at GAIB is the asset itself matters, but also what matters more is actually the cash flow. So that's what we emphasize most. Like no matter you are H100, H200, let's boil down to the atomic level. What we care is whether when we buy the asset, how much money can we get back? How much money can we get paid for the fixed amount of time, right? So that's something we care the most. So that's why when we actually tokenize these assets, we care more about the cash flow, like how much money every year they make. For example, if they make $100 a year, then we know maybe we can only give you $70 worth in order to make it over collateralized. And the asset value here too is as a cornerstone to support the asset value. And the second thing is because of this, we actually introduced our synthetic dollar called AID. So make it easier for people to invest into the underlying tokenized GPU asset. So if you think of AID as a portfolio, as an index or ETF. So you just put $100 into AID, you stake it, then the $100 you put in, we're going to help you allocate to different tokenized GPU assets, such that you don't have to worry about the different heterogeneity, or whether it's H100 in Asia, H100, H200 in the States, or H100 in Taiwan, whatever. You don't have to worry about that. You just need to know like this is a blended portfolio, how much like they're making yield wise on a blended basis. It saves your hassles. And at the same time, we have one unique currency, which is AI dollar, our synthetic dollar. You can use it in DeFi for all the utilities you want: lending, borrowing, trading. And the good thing is right now you have one aggregated liquidity pool. So all the liquidity goes to one pool, and you can have all the DeFi utilities that you want. And also the third thing is regarding tokenization. We actually have our own in-house tokenization credit metrics, credit analysis, tokenization analysis, such that whether the H100 GPU, H200 GPU, 6090 or 5090s, we can all, we don't have 6090 like 5090s, 4090s, we can all tokenize these GPUs in a very simple manner.
Yeah. So one thing I was curious about was how do you maintain one-to-one relationship between your AID token and the underlies? It seems like you guys are also backed by treasury bills and also debt financing. So it seems like underneath it, the operation seems quite complicated. So how do you tackle about that?
Yeah. So it's similar to the AID and SAID model. We're not inventing the wheel. So it's just similar to all the other synthetic dollar out there. For example, use Aethir. They adopt the similar like dual token model, one stake version, the other is unstake. So the same way happens here. AID is fully backed by T-bill, can fully redeem at any time you want, ultimately through our platform. And then for SAID, the staking version, because you stake it, the asset get the dollar and asset get used for buying T-bills and doing the GPU deals that underneath. Then they give you the yield. So if you need to unstake it, there will be unbundling time as what the other protocols are implemented. And we actually leverage that in order to make sure that the duration and the time actually matches the unstaking of the token. And at the same time, we have secondary market. If you need to have immediate liquidity, you can go to Curve Pool, you can go to Morpho Pool to get secondary liquidity if you don't want to wait for this unstaking time. So I think what we adopted is that what we have learned is that like in DeFi, there's many well-practiced mechanism by all the previous synthetic dollars. So we just learn from the best. And we also make sure that the one-to-one backing that you mentioned, when we actually do these tokenized GPU deals, as I mentioned earlier, we have to make sure two things. One, you have to have the asset such that we can do over-collateralization. Meaning if the asset value is like $150, we only give you 100. It's actually, we can have an over-collateralization ratio there. So you can have a buffer, a cushion, in case anything happens, you still have like that over-collateralization to eat. And the second thing is we have to make sure that you actually have the cash flow, meaning there's money keep on coming back. As time goes by, your initial principal and interest actually get paid back. The cushion here actually grow. So in traditional finance, we have a term called equity cushion, meaning just like, this is not a good, to give an example, right? So if you have a house, right, you take a mortgage from a bank and you keep on paying the bank's, the monthly payments, the mortgage payments. And every month you pay, you actually pay more in terms of your principal and interest. Ultimately, after 30 years, you own the whole thing. So that amount of money that you pay in terms of principal and interest is the equity cushion that you can keep on increasing as time goes on. So same thing happens to our side. So we actually allow like monthly payments of the yield, such that your initial capital get paid back gradually. At the same time, on the interest on that as well.
So just a side question to that is, the AID is not a bond contract that promises the holder to tied to some piece of hardware, right? So it's more, it works more like the token itself. The value of token increases because the cash flow from the whatever the operation that happens from the hardware flows back into the token. As in, do you have like a burning mechanism to flow that cash flow back into the token, or how does it flow into it?
Yeah, correct. So USDE and SUSDE having these like conversion rate model where the SUSD conversion rate to USDE actually keep on increasing as the yield get accrues. So same thing would happen to AID and SAID. So when the underlying tokenized GPU asset make money, make cash flow, then the conversion rate of SAID to AID actually increases. And right now, if you actually unstake it, you're actually getting more AID, which can then be redeemed to whatever USDC or the other stablecoins they initially put in.
Okay. I want to maybe shift the gear a little bit and just broadly the crypto and AI has been very popular kind of combination in terms of investment thesis in crypto industry, and there has been many other projects trying to kind of approach in that angle. You are one of them, but would you say that the way you're positioned in that space is kind of different from the rest, given that you're more focused on tokenization, or you think it's still kind of there's a lot of competition out there?
I mean, when we are the first one in the space to do tokenization of GPU, like literally the first one in the whole crypto market. When we first came out, people all thought what we're doing is another IONET, those decentralized compute marketplaces. And we used more than half a year to educate the market that what we're doing is different. The other platforms are more like a marketplace to allow usage of the underlying GPU. We are more like a financial infrastructure to allow different types of tokenized asset, AI assets, to live on our platform, to be issued on-chain, and ultimately to get the yield on-chain. So when we first came out, like there's nobody actually doing this. And gradually, after 6 months of education, the market suddenly understands. Yeah, it's actually different than what the others are doing. And they also see that this is a huge market because the asset itself is $1 trillion market. The manufacturing segment every year are throwing $billions, hundreds of $billions into AI infrastructure, mainly GPUs. Just give you an example, Tesla, Elon Musk, they bought 100,000 H100 cards, and then now they expanded to 200,000, and then they actually target to get $1 million cards of GPUs, whether it's B200 or H200. That equates to a size of at least $20-30 billion worth, because one card is actually $30,000, and for the 100,000 cards that they have is over a few billion already. So the big tech companies are throwing billions of dollars into this market, and the demand is only started to grow instead of reduced. Because if you listen to what Jensen is saying, the next era of AI model requires 100 times more computation power than what we need and what we have today. So that's why we will see the infrastructure size, the market size, will only continue to grow ultimately. So that's why even though there are competition, it's fine. Like the market is big enough to accommodate different people to work on the same thing with us. If we were the only one doing this, we might actually doubt ourselves. Are we in the right market? Is it something that people need? But if there are actually people following, it means what we're doing is right, so that people will follow. So that's where trend is being done, right? Yeah. So I think overall is a positive signal. We're not afraid of competition. We are, as always, a trendsetter. This happens with the GPU side. Also, we happen with the robotic side as well, which is our new initiative.
Yeah, I remember hearing from somebody that even someone like a CME is considering having futures contract on GPUs at some point in future. So you're probably not going to be you have a good company in the space. I think I don't know how quickly they will move, but I mean you definitely made a head start. So
Yeah, it's good. We need more. We need more people. We need more products to make it possible. Like I can share some industry observation with you. So when we first started, we also talked to the traditional finance guys. Like we're serving the whole market, those private credit, those equipment leasing who are doing this. There's only a few top private credit firms are doing this, like Blackstone. They write $1 billion of checks, and to them, like, it's a small difference in the portfolio. And a lot of the mid to long tail, like private credit funds or traditional financial institutions, are not into this. Number one, they don't understand it. The second thing is, if they want to enter this space, it actually has quite high technical and knowledge barrier, because they need to know like how much GPU makes, who they're selling to, the depreciation schedule and everything. So it's easier that they work with us, like which we have already the framework, the token standard, the standardization of the whole tokenization process that we on our platform. So ultimately, what we GAIB want to do is become a platform that we can have more participants, which we already like trying to get on board. There are a few private credit funds are working with us, can be the underwriter, the sponsor, the LP, the capital provider on GAIB's platform. And ultimately, we want to expand our reach to more cloud companies globally, such that they know, oh, other than traditional financing options, there's such an interesting solution here with GAIB that we can use. And ultimately, the networking impact and flywheel can drive way bigger in terms of the whole industry growth.
So for the current state of things, do you think the financing dollar is outpacing the demand for the usage in data center, or is it the other way? What's the current state, do you think?
It's actually the other way. So right now, we're actually seeing more demand for the underlying asset than the capital can provide, actually. So the growth in AI accelerated a lot this year, like comparing to last. Because as I mentioned, in the past 2 years, when ChatGPT 3 and 3.5 came out, all the big tech companies are trying to train their own foundation model. They're having like foundation model race, and they spend all the money to burn all the money to train the model. It was until this year that they realized that, oh, the model is good enough. The iteration of foundation model is not that, like the marginal benefit for iterating that is not that important than building actual applications with these AI models. And that's when DeepSeek came out. A lot of these companies, startups or big tech, are trying to focus on the application side. It's also why we see different like AI agents or different AI models being used for video generation, for image generation, for all these like 3D figure generation are being more popular and in production usage. And that's a good thing, because we all see the stories about 4 or 5 people, startups making 10 million ARR in 10 days or 100 million ARR in 30 days. So these crazy stories actually tells a good thing, meaning the consumer side actually funding the growth and usage of AI, which drives way more demand for the underlying infrastructure asset, the GPU usage. So one fact is that when DeepSeek came out this year, the per hour rental price for H200 actually grow instead of dropped, which is in contrary to most people thought. Most people thought, oh, there's a powerful model that came in, more efficient, doesn't require a lot of GPU. GPU market is gonna die. Like we don't need that much asset there. But in contrary, we saw a growing demand in terms of the computation power. Thanks to several things. One thing is the models are more used for reasoning, meaning even the smaller efficient model, they got iterated and run multiple times. So the computation power that actually increased. Second thing is we're actually seeing like way more actual usage and application by the company these days that people are paying the money for. And these all right now is driving the underlying asset to grow. And also the cloud companies in the space are expanding way more. So I would say we're still in the demand-driven phase, demand like driven market environment, which is good.
So I saw that you guys partnered with protocols like Aethir. What's the strategy play here? What are you looking to do?
Yeah. So Aethir is a decentralized company marketplaces, right? So they have like connection to different cloud companies and GPU providers. We're also one of them. There's several ways we work with Aether. One is because of our unique connections to the other cloud companies, we can actually supply GPUs on Aether. For instance, we supplied the first 200 GPU in the whole crypto on Aether platform, and subsequently to IONET. And the second way is there are a lot of these GPUs using Aether's platform that people are renting these GPUs. So there's a cash flow on chain for these GPUs already. So what GAIB can do is very simple. We're just tokenizing these GPU asset together with the on-chain cash flow that Aether makes, which can help Aether and the GPU providers on several ways. One, they can get a capital earlier so that they can buy more GPU, put more onto the platform and support the growth of that. The second is we can actually allow more people to tap into the underlying asset growth. Like for example, you are not able to invest in Aether GPU. Now you can do so. But whatever the demand and the revenue the Aether platform makes, if you buy into this tokenized GPU on Aether, then you can also get part of that. So this gives quite some advantages to the cloud providers as well as Aether. They get more volume, they get more users, and yeah, it's a win-win situation that we and Aether work together.
Now, going forward, I mean, it's obviously I think that there's a lot of opportunities in the space, but like over the near term, what would be the next kind of a big thing that GAIB would be going after, and what would be your focus in the near future?
Yes. Thanks for that. We just announced our robotics initiative 2 days ago. What is it about? So I think some people will get like confused or puzzled. Like, is GAIB doing compute, or are GAIB doing stablecoin, or the GAIB doing like robotics now? What is GAIB? Right. So some people got confused, but ultimately, if you force down to the level, like what the nature of GAIB is, we talk GAIB is actually the economic layer for AI and compute future. An economic layer comprises of two things. One is on the financialization side. How do we get the physical asset into blockchain, on-chain? The second side is how do we make these assets liquid and tradable in the DeFi market? So those are the utilities that we're going to make for it. And that's where AID and SID comes in. And in terms of the asset side, we focus on compute, the GPUs. We have proven our track record. We have done several deals with the GPUs, and this is going to grow. And the next thing to us that we think will come into AI sector, the AI infrastructure sector, is actually robotics, or we call it embodied AI. Giving the AI the brain, a body, so that it can move in physical world. Why would that happen? Because robots similar to GPUs are quite expensive. Like one humanoid robot today would cost like $50,000 to $70,000. It's hard for anyone to buy one, even though you are a big group or conglomerate. If you want to buy 100 of those, that would cost you quite significant amount of dollars there, like $7 million for $70,000 robot. So who's gonna be the one funding all these capex, funding all these financing? And ultimately, to me, I think robot will actually adopt a robot as a service model, meaning a SaaS model, but in a robot landscape, such that you can get all the maintenance or the ongoing service upgrade from the robot company. So in such a case, we have a hardware, we have an asset, and they have the continuous revenue stream. So it makes it a lot interesting right now that we can tokenize them and allow people to invest into it. One interesting use case is robotaxi. Think about one day, like all the taxis around our city are running driverless. We want to be one of the investors, such that when we're working, our cars are generating revenue and cash flow for us, right? And tokenization is here to actually help you do so, like opening a channel for you to invest into. So it's a nascent industry, but it's filled with a lot of potentials. And because of our unique connections in the robotics and industry sector, we can be the early ones to bring these opportunities to the mass.
Yeah, that sounds really interesting. I've learned a lot today, Kony. So it's been a great session. If people want to find out more about what you're doing, how can they find that information?
Yeah, they can check out GAIB.ai or our synthetic dollar, AID.gaib.ai website. Follow our Twitter, follow our Telegram, and also our Discord channels, such that you can find out and get the updated information about GAIB.
Sounds great. Okay, I think we're gonna wrap it here. Once again, Kony, thanks for your time, and good luck with your future progress on your project.
Thank you for having me.
Bye.
Bye.